Welcome back to the channel, traders. In today's market breakdown, we're diving deep into XAUUSD, that's gold versus the US dollar, one of the most watched and traded assets in the Forex and commodities markets. We'll be analyzing key levels, recent price action, and the macroeconomic factors that could drive gold's next big move. Whether you're bullish or bearish, this is a must-watch before placing your next trade. So grab your charts and let's get into the gold game. All right, so currently we are in the 5-minute time frame, and the reason why we're in the 5-minute time frame is to basically analyze the weekly open, right? So we closed off the trading session for this pair last week on Thursday. Why? Well, Friday was a public holiday. Happy Easter, by the way, and there was basically no trading for Friday and the days after. Well, price opened on Monday 21st April 2025 at 1 a.m. UTC +3 in my time. So currently it's 8:49 a.m. and looking at the price, well, price opened here with a gap up. And you gotta understand what is the period that we're in. Well, looking at to get that, we can look at the monthly time frame, and basically we're looking at the current monthly candle. Well, yes, the candle is bullish, but then guess what? It's we're nearing the end of this candle. And what's the nature of bullish candles? Well, they open up with a usually they first trade lower, creating this lower wick, and after that they go bullish. Then later on they close, but then they first move down, and that movement down on the lower time frames will perceive it as a retracement move. So we expect price to go lower before it goes up the next month. So that's one thing to have in mind before we place any trades, before we get finger happy and tap buy or sell buttons, right? So that's one. And judging by the way this new week has begun, opening with a gap up, and look at where it opened at. Let's first go to the 4-hour time frame because it was more clearly shown here. So we were currently just around there. So price had showed like it wanted to to go lower, right? But then well, right now we see like price has shifted, but it's better shown on the 1-hour time frame. We had shifted down here to the downside, and price was printing candles lower and lower. So we're currently around this price level. So here the intention was basically to sell. Things were looking good for the sellers, but that's exactly when the market closed on Thursday, 17th April 2025. Then on opening, we gapped up, and we're printing higher and higher candles, and usually when we gap up, there is a possibility of a retracement. So even here there was a little gap up on Wednesday, and then after that, well, that's why we retraced like this. So usually for me, I usually, when I see gap downs, I expect price to first move up and close that gap. Then after that, we reach maybe another a lower area of liquidity. Then we buy. And if at all we're gapping up, well, it could show that we're going to, the weekly candle is most likely going to flip bearish. Who knows? But just judging by the candle anatomy, And also keeping in mind that most of the time gaps get filled. They have to get filled. Gaps, fair value gaps, all represent inefficient pricing. What do we know about inefficient pricing? Inefficient pricing usually has to get balanced before the market, goes to wherever it goes or where it's supposed to go. But usually the gaps have to get filled before anything. So currently, what I'm waiting for, given the fact that Monday has opened bullish, I expect something like this. Could react here. I don't know. Could react there. But all I'm waiting for is to see. I'm waiting to see this kind of movement going into the close of this month. This is the kind of price action that I'm waiting for. So I'm not really going to look for buy positions just yet, but in the event that we reach this level here, 3,400, I'm going to have an eye open for price action in the lower time frames. In the event that we maybe see a pattern like that and it reflects perfectly on the higher time frames as well, that is the 4 hour and the 1 hour. So I could see this on the 1 hour. The 4 hour, I could expect to see this movement like that, specifically this one. Before I couldn't take this sell. Why? In the 4 hour, it was only like this. It was only a kink. So yes, I didn't do the pre-market analysis for this one, but I was planning to. But let's just go with this. So I looked at the price and it was looking like this. And to me, this is usually just a continuation pattern. Usually, most of the time, price does this afterwards. Even if we get a shift like this in the 1 hour time, but you go up to the 4 hour time frame, and the 4 hour time frame is looking like that. It's only making a kink, and it's not making a transition kind of pattern to shift to the downside. And also you see the candle bodies don't even go below this area, and actually this area is not a good one. I wouldn't even consider it so much, but yeah, it only collected liquidity, as shown by this wick. And and the thing about wicks represent rejected prices, and also wicks have a story to tell, because that's basically where the liquidity is. Well, wicks also go to where liquidity is, so they're good to analyze. We have to be cautious about them, because in the event that we neglect them, well, guess what? Wicks also tend to do most of the damage in your trading. Whether you're in a trade or you're about to enter a trade, usually wicks are the ones that cause the damage to your execution. So you being unaware of them could lead to a dire situation for your trading account. So you have to keep them in mind. All right. So currently, price is looking like that. It's still bullish, and as the last weeks, for this month, go by. Well, this is the last actual week for April, and to close off the month of April, we're still going to have like extra 4 days before this month closes. But yeah, but basically, I consider this like the last month for April, and usually as months close up, well, we get retracement moves like this. We tend to get changes of character on the lower time frames, because these big 3 time frames dictate the trading environment on the lower time frames. So with that in mind, it's been already 10 minutes, and I think this information can do you well. So all we got to do is to be alert. You have to be aware of this gap that has been created today on Monday. Monday has opened bullish, and judging by basing on our knowledge of candlesticks, bullish candle usually first opens, creates the lower wick, and goes up, and the bearish candle is the opposite of that. So just have to keep that in mind. And what am I looking at? I'm looking at the weekly time frame to frame this idea. Why? Because sometimes on the daily time frame, sometimes we get on gold, we get these candles here with barely any wicks. So when I'm looking at candlestick anatomy, I want to use the weekly candles because they give me more information, right? So that's just a tip. You can use it or not, but yeah, that's what I'm looking at right now. I'm going to wait it out till Tuesday before I place a trade. I'm gonna first see how the New York session goes, and yeah, we'll see what happens on Tuesday and Wednesday, because that's when usually the market tends to reverse the initial move of Monday. So that's all for now. Let's see how it goes.